Hello guys, this is the Trading Journal from verticalspread.com. My name is David and I'm also known as the Spread Doctor. And today is Friday the 30th of October. So the equity market started off today with the sellers firmly in control. And at one point during the trading session, the Dow was down by as much as 500 points. However, going into the close, the buyers came in and they cut into the selling. And they cut so much that at the closing bell, the equity indices that were down by more than 2% during the session managed to claw back some of the losses, and they closed way off the lows of the day. The only exception was the tech index. The Nasdaq was down by more than 2.5%. And today is the last trading day of the month, the last trading day in October. And to me, seeing the buyers coming at the close is not unusual, not even surprising for month end. Because at month end, all sorts of positioning takes place. You have some fund managers who want to realize the losses on some of the positions they held during the month. And they want to buy back that same position at a much lower price in order to achieve a better return the following month. You have some managers who are positioning ahead of next week's elections, and you have some managers who are buying some beaten up stocks on their shopping list. However, for the month of October, all the equity indices were down for the month. And that makes it the second consecutive losing month that the equity indices have posted. They were down in September and now they're down in October. And to put some of the losses of these indices into some perspective and some of the damage done, the Nasdaq is now 10% below its all-time high that it printed only a few months back. And the accumulated losses for September and October in the S&P 500 now mean that the S&P is up by less than 1 percentage point for 2020. And it's now 9% below its all-time high that it printed in the summer. And that leads me on to a question that I posted in one of our forums a few weeks back. I remember asking what your return expectations were in regards to vertical spreads. And I got a number of responses back, ranging from I do not want to lose any money to I want to at least 100% return on my account size. And I in turn gave my own expectations, and my expectations, as I mentioned in the forum, is to benchmark my performance or my returns against the equity indices. Most of the spreads I sell, the vast majority, if not all of them, are equities. And the benchmark for equities are the indices. So I benchmark my performance against the equity indices. And the thing is, I also do not want to lose any money. I don't think any rational human being wants to lose money. But that is an unrealistic expectation. Because at the end of the day, what we're doing here is we're taking risk and we're managing risk. And one of those risks, which is ever so present, is losing money. And I know that it is a matter of when a losing trade is going to come along and not a matter of if it will come along. And to me, what is really important is not whether one loses money on a single trade, but how one manages that losing trade and how one responds to it. And to also make sure that the loss is on any particular trade is insignificant in the larger scheme of things. Insignificant to the extent that it doesn't pose any risk of blowing out an account. So one of my main goals is to eliminate the risk of an account blowout. If you've ever had your account blown out, you'd understand what I'm saying. I've had it quite a few times earlier on, as people usually do. It's the price of education in the markets, is how many traders perceive it. And that is what I strive to do at Vertical Spread. My goal is not to put on so many trades simply for the sake of whipping up excitement or hype, or indeed to compete with the high frequency traders. The HFT guys have an edge that I do not have, and it would be really stupid and silly of me to try and compete with the high frequency traders. And I was having a conversation with a few friends recently, and one of them was so proud that he put on 400 trades in a month. Nothing wrong with that. Whatever works for each individual, fine. But my goal is to put on as many or as few trade ideas that meet my stringent criteria. There have been months where I put on 5 trade ideas, and for the November expiry, for example, I only found 3 trade ideas and I got filled on 2 of them. And the end result so far is that while the S&P is up by below 1% for the year, I started posting Vertical Spread trade ideas in April this year, so I started in Q2. My account is up by 64% as at the end of Q3, so as at the end of October. If you haven't already seen the October expiry trade review, in which I covered the October expiry trades as well as the quarterly account performance, you can go to the 2020 Trade Ideas Forum and go to the October expiry, or you can simply click on the link which I'm going to copy below, and that will take you to the summary. So I'll finish off this by saying what I'm doing is clearly working, as borne out by the numbers and the stats, and I'll continue to do what I do until it breaks. I hope that makes sense. So I'm not going to just post many trades just to make up numbers or to appear to be busy. If there is nothing for me to post, I am not going to post anything. Moving on to the VIX. The VIX was up slightly today to close at 38.02. And the VIX now steadily being above 30 is not surprising given what we have in stock for next week. I had no new trade ideas today, but one of my open positions for the November contract hit its profit target today. My GTC order was filled and I took my profits. That position was in ARKK. I'll cover it next in open positions. There are now 20 days for the November contract to expire and 48 days for the December contract to expire. And that means that my window of opportunity for selling spreads in the December contract will open up early next week, and I'll start looking for spreads to sell in the December contract. Moving on to my positions. I now have one open position in SLV, this one here. One open position in SLV, one open position in SLV, one closed position in ARKK, and one synthetic position in TAN. I'll start with SLV. So in SLV, I sold the 20 to 19.5 put spread for a credit of 52 cents. At the end of week 2, so silver closed today at $21.99. I'm short the 22 put, so my short strike is currently 1 cent in the money. And at the end of week 2, my P&L is now showing a negative P&L of $22.50 per contract. That's today's P&L. But the overall P&L is $22.5 negative per contract. And as I mentioned on Wednesday, I am in no rush to adjust this position. And that's largely because the buyers keep coming in to bid up SLV into the close. So there are buyers out there and they are passively buying SLV, and that is providing some support for SLV. But of course my view would change if the buyers were to step away and allow it to fall. But for the time being, no action is required. I'm happy with this SLV position, so nothing to be done on it. The second position is in ARKK. That one closed out today. I'm going to cover that one next. So here's ARKK. I'm going to the forum for this one. The trade date was the 19th of October. At the time, ARKK was trading at $103.22. Implied volatility was 63.6. There were 32 days until the November contract expired. I sold the 110, 115 call spread for a credit of $1.30. Sorry, a credit of $1.40. Once I got filled, I set my profit target at 40 cents, and I created a good until cancelled order to buy back the spread for 40 cents. I sold the spread for $1.40, wanted to buy back for 40 cents. At the end of week 1, ARKK was trading at $99.18. Implied volatility was 62.1. The P&L at the end of week 1 was positive $65 per contract. At the end of week 2, which was yesterday, my GTC order to buy back the spread for 40 cents was executed, and the position closed and I took my profit. The overall P&L on the trade is simple enough, $1. I sold it for $1.40, bought it back for 40 cents, and that equates to $100 per contract. If you'd sold 10 contracts, that would have been a profit of $1,000 for the 11-day trade. The duration of the trade is 11 days, so it was opened on the 19th of October and it closed out yesterday. So that is the second position I had for November. Going on to the third position, which is a synthetic position in TAN. So TAN, I sold I didn't sell it actually because I never got filled. The trade idea was to sell the 80-85 call spread for a credit of $1.10. Someone actually got filled for a credit of $1.10. The profit target is 50 cents. Let's see where TAN closed today. So TAN closed at $68.77. The short 80 call is way out of the money. As I don't have a position in this spread and no GTC order, it's impossible for me to know if the profit target of 50 cents was hit intraday. The only way I would know is by being glued to my screen and watching every single tick. But I'm totally allergic to trading by being glued to the screen. So if you have this position and the profit target has been hit, please inform me so I can update my spreadsheet. But I can work out what the P&L would be if this position was still open. So it's TAN and sold the 80-85 call spread for $1.10 and the profit target was 50. So this is TAN. If I go to my trade tab here and recreate selling the 80-85 call spread, so sold the 80 and bought the 85. and it's currently marked at 60. So the mid price is currently marked at 64 cents. Sold it for $1.10. So the profit P&L at the moment is positive $46 per contract. The profit target is 50 cents. I don't know if this thing traded as low as 50 in intraday because I don't have an open position in it. So if you have this position, please let me know when you get filled in it. And that takes me on to my watch list. I've got quite a few items on the watch list today. Amazon has hit my watch list. Amazon, Spotify, CHWY, BCLI, ARKK is still there, and TAN is still there. I'll quickly whip through them. So you got AMZN, Amazon. Amazon is down $174 today. IV 59.2. That's why I hit my watch list. Spotify down $26. Implied volatility 53.78. CHWY. This has implied volatility of 50.7. BCLI. This has implied volatility of 104%. I think this one is a pharma stock, and it has here Brain Cell Therapeutics. I think it's got some binary event coming out end of November. That's why IV is so elevated in this one. ARKK. Close out the position today. Implied volatility on this one is 76. And finally TAN. Implied volatility on this one is 62. And that brings me to the end of my journal for today. The main highlights are one of my positions hit its profit target today. It's now closed. The window of opportunity for selling spreads in December contract will open up next week, and I'll start looking for spreads to sell. I hope you enjoyed listening to my journal. You can leave me any comments or questions below, and have a great weekend. Goodbye.